Two more to go, traders. Two more to go. That's central banks and days before it's the weekend. Morning, Kate.
Good morning, Ryan. Good morning, everybody.
How you doing, mate? All right?
Yeah, so far, so high.
So far, so good. Yeah, tell me about it. These last 2 weeks have been really, really long, haven't they?
Yeah, but there's one constant in this, right? It's a strong euro and CBs hiking some more than expected, and it's not always making life easier, but all right, here we are.
Yeah,
and a couple more to go.
Yeah,
Just before we talk about all the other stuff, there's one that we really need to keep an eye on, because we are scratching our head about whether a central bank will do 25 or 50 BPs or stand still. We've got Turkey coming up, and they're expected to raise by 11.5%. That's 1,150 BPs if you want a central bank that hikes a little bit.
Yeah, some even thinking they may hike to 25%.
Yeah.
Hit. So yeah, we're not talking 25 BPs, we're talking 2,500 BPs.
Exactly.
But that one, yeah, that one's going to be a bit of a popcorn moment. We can all sit back and watch the charts and what happens with the Turkish lira on that one. Not fun and games if you live in there.
No, absolutely not.
Saying that things are pretty dire over there. So we obviously feel for the people on the ground while Erdonomics does its thing.
Totally.
But we shall see what they bring. And speaking of emerging market currencies, the Bank of England obviously doing their thing as well later, which we shall touch upon. Right, let's get stuck into it. We're getting a few of the other BOJ members popping up now. BOJ's Noguchi says Japan's economy is expected to recover moderately. And the Bank of Japan shows strong commitment for continuing easing. Price expectations are not anchored at the 2% goal. We must keep easy policy to ensure wages keep rising, and it's important for wages to rise continuously, not just once. It says it's desirable for wages to rise next year more than this year. Decline in the yen last year was too rapid, and the decision last December to widen the allowance band around the yield target was not monetary tightening. So this BOJ member is looking far, far ahead to next year in terms of wages, which we've got to do as well, slow and steady, as we've been saying for a long while. Right, more central banks popping up this morning. The SNB hiked rate by 25 pips, as widely expected, to 1.75%. There were some expectations for a 50. I thought they might side with a 50, but no, they went with a 25. I think certainly what I missed among all that is that they now see 2023 inflation at 2.2%. Which has probably was the keys to it, this SNB decision on whether they went 25 or 50, because they are close to their 2% target. So there is no real need to go hiking in big steps. As I say, I probably missed that conclusion. Obviously, Jordan's been out, prepared to intervene in currency markets if needed, prepared to hike further if needed. Did say a marked decline in inflation is welcome, and we cannot rule out further monetary policy tightening. But he did say our monetary policy is significantly more restrictive than 1 year ago. A less hawkish hike, Kay?
Yeah, absolutely. It doesn't mean they're done, because if you but the revisions for inflation to come down, so they revised it down for this year, slightly up for next year. But nowhere panicky next year, if I remember correctly. Well, we know that they one of their means to fight inflation is also the currency, right? So I don't expect the Swiss to materially weaken. Let's say, I mean, materially, like Euro Swiss up to 105 or 110, you see. But there is a case to make here that they seem a little more content. And I would not be surprised if there is a bit of a gradual tryout at least for the Swiss to weaken a little bit on the back of the SMB. But then the threat of interventions will always be there. Also, it does seem that if you take their inflation coming back to 2 or 2.2, they are still only at 1.75%, right? So if there is somewhere, which he didn't really say, but if they want to get rates somewhere into positive territory, they will have to hike one or twice more, right? The thing is, that is not going to happen unless an emergency meeting before 3 months, because they only do quarterly meetings. So there may be a case for Euro Swiss. Yesterday I was looking at that Euro Swiss and at that the way it held around 97 or just below, and I said, like, okay, if they put it down there, I'll give it a try there to go a bit long, perhaps. But they did not succeed to put it much lower, because I do think the market has understood now as well that they seem to be relatively, everything is relative, but relatively happy with the state of affairs right now. Otherwise, as you say, they would have done 50, right?
Yeah, but I suppose that what might get missed in the post is that their inflation rate is at 2.2%. You know, they're not seeing hot inflation like everywhere else, and there really is no reason to go all guns blazing on rates like everyone else.
No.
You know, if their inflation was up at 6-7%, fine, we'd probably be penciling 50s for another few quarters. But they are at a lower level than everyone else. Which maybe that gets missed sometimes when you look at these sort of things.
I think SNB doesn't print cash, right? Or to hike inflation much. They're actually on the other side. They're buying Swiss franc back. That is one thing which they understood. And for the rest, okay, we can't go and say that their economy is booming, because it's not really booming anywhere. But if you look at their companies and what they are selling as well, compared to the imports and stuff, that it's kind of logic that their inflation is a bit less. It's a really stand-apart country, right? You compare it if you then bring it back to the central bank's world, you can compare it to the Bank of Japan. It's hard to put them in the bracket of all central banks. You have to look at it a bit separately from the rest. And to talk about the Bank of Japan, this Noguchi is really putting the carriage in front of the horse again. And now he says that they need to continue to monetary easing for the wages to go up. I mean, it would have been the opposite. If wages go up, they can start to relax a little bit. But no, he says we need to continue to push. So that was a bit of a strange one. But yeah, back on the Swiss, I think it does show. Other ones call it data dependent. They say, like, okay, I mean, this is the hike, and now we revise the numbers. Now we have 3 months to see what's going to happen, right?
Yeah, and play the FX markets in the meantime. Yeah, it's easy life, isn't it?
Well, I mean, yeah. The thing is, though, they have to take losses, right? Because they have been buying Euro Swiss by the bucket load between 120 and 105. And then now they're selling it out between 105 and 95. So, I mean...
Yeah, I'm sure Jordan's jobbing it around in between. They'll end up with a profit somewhere down the line. Don't you worry about that.
Probably.
Bank, so, and if not, they just write it off like everyone else does. But anyway, that's a different story. Moving on to the other side of the coin, and the central bank who is still firmly hiking. Norges went a 50, as was widely expected by a lot of banks over there. So they're now at 3.75%, and with more to come, because the committee's current assessment of the outlook and balance of risks implies that the policy rate will most likely be raised further in August. Just on their inflation targets, they see one of their main inflation measures now at 6.3% versus 5.6% prior. And another central bank, a bit like the Riksbank, complaining about the level of the krona and how they're a bit of a loss to explain why it's moving the way it's moving. What did you make of that point?
Yeah, okay. Some of it is actually down to themselves because they are selling Norwegian kroner every day.
Yeah.
That is one aspect. And the market understands that. So when oils and gas, especially European gas, was coming down very rapidly, Norwegian kroner got hit because it was very hard to to be long of the stuff if the central bank sells every day, you know. I've got the slight impression that they may do come up with a little bit of a surprise at the end of the month, because if they're really so adamant about the Norwegian kroner being too weak, they may decide to at least stop those Norwegian kroner sales for a while. Yeah, I think they have more impact than Sweden, because in Sweden it's even more like a turtle on its back and unable to crawl upright again. I think if a central bank can do something about, not amongst the majors, but it's like a second level central bank can do something about it. Maybe Norway is the one that could do it, you know, because
Yeah.
they have still, if you look at contracts and stuff for exports of oil and gas, and I mean they have a lot of receivables, a lot of stuff coming in and out, and then I also think it's one of the countries that mostly own their own debt. So I don't think there is external debt, but I'm not sure about how much it is, to be fair. So for them there may be a valid case of trying to curb this NOK weakness. The market heard it. The market sent Norwegian kroner % stronger, but then that's it, or 1.5, let's say, if you reckon that euro NOK came from the 1170s. But yeah, now we have to rebalance, or I mean reevaluate for how long this can last, because as we have already been saying, it's not only interest rates that matter, right? And if you're at 3.75 or 4% and expected, I think their new expectations are to go to 4.21 or something. But you have an inflation of 6%, it's still not going to be brilliant, only on that front, I would say. So still a bit cautious.
Now, I know the answer 99.9999%, but if you want to, you're talking about countries that are able to affect their currency. Could they do something via the sovereign fund? Could the government do something via the sovereign fund, or you know, is there a complete disconnect between that and everything else?
They should be the sovereign wealth fund should be independent as well, but we know it's far from, right. It's their oil fund really, basically, as well, and there's always going to be wishy-washy between the both. Now, what can they do? Like purely buy Norwegian kroner, sell other assets? I don't know. I mean, you've got to start to sell foreign bonds or so, but
I don't know if they've got reserves in the pot.
Yeah, you can use your reserves, but I wouldn't. Well, they should not use it to sell foreign bonds, for instance, to strengthen your own currency, because then you lose a part of what the aim of the game is of that fund, right?
Yeah, exactly. Anyway, just an outlier thought. I thought I'd.
Yeah, well, that's an interesting one, to be fair. That's a very interesting one, actually, that question.
Yeah, you never know. It always helps if you try and cover as many angles as possible, but we shall see. Right, coming over to Europe, and apparently the German recession will be sharper than expected, according to the IFO. These guys are usually glass half empty, so no surprise to see dour sentiment from those guys. ECB Schnabel said we must carefully monitor wage price spiral risks. Says that domestic inflation has been driven by profits and wages. Wages have been okay over there, and they're going through some industrial action and higher pay awards as well, as a lot of countries are. But not quite seeing the type of wage spiral we're getting here in the UK. So lower levels, but she seems to think it's the big driver of inflation over there in Germany. Fed's Powell bored everyone to tears yesterday afternoon, and as did the politicians. There's a couple of comments. Started off in the testimony, which was pretty much a word-for-word repeat of the last FOMC statement. No extra bells and whistles lobbed in there. Said that repeating that officials see somewhat higher rates by year end, saying we are moderating the pace, much as you might decelerate a car as it nears its destination. The level for rates and speed of rate hikes are separate. Talking about housing again, saying housing inflation will come down significantly this year and next year. We'll start to potentially see that in some of the housing data. We're getting existing sales today, I think. I think there's some price component in that. So we'll see whether that's coming to fruition. He says it's hard to know what rate level will achieve the Fed's goals. It says we never used the word pause, and I wouldn't use that here today. Definitely not using the word skip yesterday either. Overall, he went to pains to say that the hikes were not over. That was the main sort of theme coming out of that hikes weren't over, which again asks the question, well, why you paused in June then if you think you're going to need to hike again? Hike now and then worry about it. But anyway, I'm not the Fed. Fed's Goolsbee, also speaking around at the same time, said the decision last week was a close call for me, trying to figure out if we have done enough already and how much more needs to be done. It says not decided on the rate decision in July. Fed's Bostic believes rates should stay where they are for the rest of the year. I don't know if you caught much of Powell, Kay, and the continued waffling over there. Did it strike you that he was more trying to push the message about rates going up again rather than?
Yeah, we spoke about it before, and I said I think yesterday on F.A.C.E. I said I wouldn't be surprised if he's going to try to fight a little bit about against what the market thinks, that a pause could become permanent and all those things, and that's exactly what he did, right? We have another round of him by the way this afternoon, yeah, and then he talks in front of the other committee. He's gonna have another series of very and perhaps less intelligent questions. Yeah, I think he's going to some lengths to say like, hey, we may not be done, but we need to see the impact of things. We can also not forget, and there's very, very little has been said about that. And of course, the man on the street or the woman on the street is worried about the housing market and stuff. But very, very little has been said over the meeting and yesterday of quantitative tightening, and because that's still running in the background. And I guess that is some kind of the hint that Powell wanted to give as well, to see like how the financial conditions evolve, because you have the other stuff going on, but then also the quantitative tightening, and I think that's where he wants to give himself like an extra month of data, of course, as well, and see where we go from here next. So somewhere trying to understand what they are thinking. I understand what they did to pause. Whether it's right or wrong, I'm going to leave in the middle, really. I mean, I've been saying it a lot of times. Us is not we should actually only judge them by the way the markets are moving, really, right? I mean, whether they're right or wrong, they probably were all wrong since Volcker. So we can't really say that any central banker has a lot of credibility. But yeah, he was fighting back a bit. That doesn't take away from the fact that the dollar is a bit on the defensive, but I think it's got a lot more to do with the strength of the euro now than the weakness of the dollar. Especially for the euro dollar, but it's dragging the rest in its slipstream a bit. But yeah, to me, I mean, the bottom line is they are probably not done yet.
Yeah, exactly. I did a little bit of a where are we now cheat sheet in the room, and yeah, probably 1, 2 in the pipe for those guys, whether they pause in between each one. But certainly their forecast see rates another couple in the pipe. So, but whether they get there or not is another question, and data dependent, as we all are.
Exactly, Ryan. Exactly. If they are data dependent, if they don't know what decision to make until the day of decision making, why would we? So we are also equally data dependent, and that's what I've been trying to say since those central banks are starting to talk about that. Is if they don't know, we should react to data again, and with that we can build our expectations for central banks. But I think we are as data dependent as they are. So. For instance, get better numbers out of the States after a round of relative weakness, the dollar could easily recover versus most currencies. Continue to get sluggish data. It's probably versus those who are the strongest right now, such as the euro, going to suffer. And then at the back end of the class, you have the Bank of Japan.
Yeah, exactly.
I'm really worried for the yen. Huh? I'm worried for the yen. I mean, if Ueda and Co just stay like they are now, I got the impression that the yen is going to get another hammering, and the only thing that is going to be able to stop it is the MOF.
Yeah, I think they might struggle this time though.
Well,
because you take last year, that was a combination of Fed rate hikes as well as what the Bank of Japan were doing. And they were, the economy was still doing fairly well. So there was a lot of dollar in that dollar yen move, as well as yen weakness. But if now we're facing a weaker economic picture, I'm not saying massive problems, but flatlining growth and the end of rate hikes. If you start seeing the yen weaken again and it hasn't got that other side influence, that's when I think they've got big problems.
Yeah,
because they can't blame half of it on something else.
Yeah, and again, if we assume that all those rate hikes are going to start to weigh on economies globally, when are the Bank of Japan going to do something? Because if it gets okay, your yen may strengthen a little bit because of the correlations and stuff, and other central banks needing to stop. But in the meantime, I'm just saying, in the meantime, it's a relatively short-term impression that I have, which is give and take a month until the next Bank of Japan meeting. In the meantime, if the market takes it as the way I take it right now, you could be at 145 next week, and those yen crosses. If you look at the crosses in the yen, it's horrible. I mean, horrible for the yen. I mean, we were always looking like, okay, are we going to put in a top here or a top there? And then the euro took over, and euro yen is through massive levels. 155 around is really massive. It comes back from the 1990s, and if you look at Swiss yen, we had Joao in our room asking me to look at Swiss yen today. It's all-time highs.
Yeah,
I mean, tell me if the yen doesn't have a problem. I mean, so that to me, it is probably still going to be accelerated, and then probably the MOF will have to go to work again to stop the rot, or the big surprise would be an emergency meeting of the Bank of Japan, because it's not only dollar yen, right? The yen is weakening versus the whole world.
Yeah, exactly. And if they're not in an economic position to tighten, and if they can't get into one now, what they're going to do if global growth is coming down, because they'll get hit with the same cold as everyone else.
Exactly, and the window is now, because the additional problem that they had last year was a negative current account, and now it's gone back into positive, and they have wage growth. Why don't you just start normalizing, right? I mean, just normalizing, not like massively hiking, but normalizing, because if they don't, the yen is going to suffer greatly again, in my opinion.
Yeah, because they're already on the floor, and the only direction they've got is into the basement.
Exactly.
So anyway,
Right.
you're
Yeah.
sending shivers down my spine, mate.
No, but I mean, we have to look at stuff sometimes, and now we are in the midst of all those central banks going on and on, and we've seen S&P hike, Norges Bank hike, Bank of England is going to hike. Okay, the Fed was a bit of a standstill, and that's the reason why dollar yen is not breaking 142.5 probably. But in the meantime, Ueda and Noguchi overnight are sending the message that they are not going to, they're not even in a hurry.
Yeah.
To do anything. I mean,
It is
that's
a bit
really
scary. It is a bit scary.
yeah, it is a bit scary, honestly.
As much as we've been expecting changes to their policy, we've got to be prepared if they don't. How screwed they're going to get. So anyway, let's not worry about it today. We'll worry about it tomorrow.
Yeah.
Just lastly, the Bank of Canada, in their deliberations, debated whether to hike or hold with the hike signal in June. They saw GDP, inflation, and housing data as convincing them why they hiked. Indeed, the market has raised hike expectations for the July 12th BOC meeting. According to money markets, that's now up to 76% chance of a hike, up from 64%. That rise has come on the back of the retail sales we got yesterday, which were fairly okay, although it's we're talking April data, so as usual, they're months behind everyone else. A couple of questions coming in from you guys in the chat. Ali talking about gold and whether we're trading quarter end, month end flows. I think we're probably a bit early to start seeing that, but never say never. The same from Mike. Euro seems on a tear. Do we believe funds are front running end of quarter flows? Again, it might be a bit early. I think we're still trading around the central banks and everything that's going on. As we've been talking, it is a two-sided story. As we said, look at euro yen. Yen is having a big influence here on the back of the central banks on the carry trade and everything like that. Euro is stronger, and the dollar. When you look at dollar yen, that's my go-to pair for what's happening in the dollar. So when you're seeing the dollar weaken versus the other majors, cable, Aussie, euro, whatever, but dollar yen is remaining positive, you know that there's a big heavy yen influence in things rather than the dollar. The other signals that suggest this isn't all dollar is looking at yields. We're not really going anywhere in yields. We're probably having one of the calmest periods we've had for a long while, sitting between 3.7 and 3.8%. So the fixed income markets are pretty settled at the moment. No huge volatility coming in and out when we were flipping 20 pips on a day. Big moves coming in there. Where you can see a bit of influence for the euro is obviously in euro sterling, which is a bit more bid. Where's it gone? There it is. A bit more bid at the moment, coming off the lows. We've had a little mooch above 86, holding above 86. Can't get above this sort of area here. So it's a bit in the wind, especially with the Bank of England just about to drop on that. Oh, hang on. Let me shut that up. And so on to the BOE. Firstly, we need to look at what's coming. So the market is largely expecting a 25 pip hike. Some of the market are looking now at a 50 based on the inflation data. As always, what we need to look at is, where are we? Is the votes. We're expecting 7-2 again for a hike. Ordinarily, the votes might be a bit important. What the votes will show underneath the main votes, if you like, is whether anyone votes for a 50. That might add a little bit of a hawkish slant because you'll get within the minutes and the statement, it may be a 7-2 again to hike, but it may be 5 of those wanted a 50. 2 of those only wanted a 25. That would put a bit more of a hawkish slant on. Also, what would look more hawkish if these two unchangers, Dingra and Temrero, move into voting for a hike, that would be a bit hawkish as well, because they've been the big doves on the board. Although who's on the way out? Tim Rabo's on the way out, isn't it? Is this a last meeting? I think.
Are they not both?
Yeah, I think
one's on the way out too.
I think one's going now. One's going in September.
Right.
I'll have to
Okay.
check. But either way, yeah, both are on the way out. But it would be a little bit of a hawkish noise if, as I say, these two vote for hikes and make it 9-0 for hikes. So a couple of things to look at to determine, you know, how hawkish or unhawkish any hike is. What do you think, mate? Do you think 50s are possible, or we're going to get the same old level of cautiousness?
I mean, I don't know how many aspirins Bailey will have to take to announce a 50. But I think again, it's not something that we can rule out. We can't rule it out. That's the thing. I mean, it's like with the Norges Bank, with who else did the 50? With some of those central banks, you just can't rule it out because they will probably now be thinking about what are we going to say in half an hour. So you just can't rule it out. But if Bailey is faithful to himself, if whatever they hike, he will start to say like, oh, this is going to weigh on the economy, because he's a bit of a catastrophe man, right? And base case for me is that if they do 25 only, sterling is getting sold. And if they do 50, then we will have to see what they say. Really, what they will really say about how they view the situation. If it's a panic move, then you probably see a knee-jerk reaction in the sterling, and then it's getting sold off again. But if they say 50, and we've seen the latest data, and we can weather the storm, whatever, then sterling in turn will probably see buyers. So in case of a 25, I think sterling gets sold. In case of a 50, then we will really have to look at what they are saying.
Yeah, I think it's messy all round, because they could go at 25, but then indicate that there's 3 more hikes to come, and then that's a different ball game altogether. Or they could hike a 50, which looks hawkish, and then say, well, then we're going to pause. With these guys, it really is an open book. I mean, if you go with history says that the pound's likely to end up lower. It's got more chance of ending up lower than higher after this, unless it's massively hawkish. And I'm saying that as I'm long the quid. So I can see the risks. If it wasn't for this mortgage stuff, if it was just purely based on the CPI stuff, then I'd be happy sitting in longs. I'm still short euro sterling, a little bit offside by a few pips. If I see a pop in the pound, I'm going to probably take a good chunk of that trade off. Maybe leave a little bit just to see what it does, but I'll lock in the stops. But on balance, sitting here right now, I see more chance of the pound being lower by the end of the day than being higher. There is no press conference for this one. There's no monetary policy report. That was last month, so it's just a straight headline drop, statement, minutes, and dig through the wreckage and see what happens. So, go on, mate.
Yeah, I'd say if you think about the direction of the pound, you have to be a bit careful against what as well. I mean, choose your other currency wisely. I think if you're looking at a weaker pound, this one that Ryan is just showing will probably be the cleanest trade, because the euro is bid already. The euro sterling should be the cleanest trade. If you look at a stronger pound on the other side, perhaps cable is the better one, because the dollar is on the defensive. So. I was
going to say, what about Guppy? What about Guppy?
Guppy, sterling yen could be the one that you look at. So, I mean, again, of course, if sterling goes down, cable will probably go down again. But it might not be as clean a trade as some other trades. So, that is also what we continually say here. I mean, whatever you think about a currency, think wisely about the other side of the pair, which currency you're putting against it.
Yeah, exactly. Yeah, and I'm that's why I think maybe Guppy's the one, because we know yen is going to remain weak. So if you have to match off the two, if you're going to get a dip in one, that's likely to bounce back, it's going to be something like guppy.
Yeah.
Whereas euro sterling, you know, that might continue up. We might be, you know, this might be a real solid bottom, because a lot of this move that we've had from May has been rising BOE expectations. Now we know the ECB are more hawkish. If the market doesn't like what's going on in the UK, well, we could be heading back up to that 87 level at the very least. So yeah, I think pick your poison, as they say. Know your reasons on both sides of the trade, and look for the opportunities. If you don't get the levels you want, move on to another trade, or have some patience. And
if you want to understand those moves in the market and why on a much higher or much stickier CPI sterling got sold, it's exactly because the market players will have had their move. They wanted to see the CPI, and then they are moving into the uncertainty of a Bank of England. So there is some logic in a pair like euro sterling trading higher today than it was on that CPI. It's just because the market wants to take chips off the table, and we saw cable coming down yesterday, but now it's back up because the dollar is under a bit of pressure again. But that explains yesterday's move. It's just because the market had what it was looking for, and then started to manage the positions really.
Yeah, I mean that was a big signal for me when we had that CPI report, and it ended up going higher. That's why we look at the fundamentals. That's why we watch carefully, because you have to see these reactions. You know, I was expecting the pound to strengthen on that CPI because it was really strong. It cause BOE expectations to rise. That all points to the pound continuing this move. I'm not saying massively, but I would have liked a test of the 85 zone. We couldn't get there, and now we're higher. This is even when we're expecting the bank to hike maybe 50 pips. So you can't ignore the price action. The price action will tell you what the market wants and where it's sitting, and that's where you have to look for your opportunities. So now we know that despite whatever the Bank of England is going to do, there's more chance that euro sterling goes higher or the pound gets sold off. So if you get a decent pop in the quid, that's something you got to look at. And the same when you look at sterling yen, which is Guppy Alley. That's what the nickname is for sterling yen. We know that yen is very weak. So if this gives you an opportunity, if this gives you a dip, you've got to think, well, that's something to maybe look at the other side of, fade that trade, because if the yen is going to remain weak, this is going to go right back up again. And that's what we do for trading. That's why we look at the data, look at the fundamentals, to try and pick out, which side we want to be on at any given time. I'm going to have a quick look at dollar China, and then I shall hand it over to the K-Meister. I didn't get anything off up at the 720s. I thought we might be getting a break, but we haven't. We're back under. It's done what I wanted it to do, though. It's held this area almost to the pip. As I said yesterday, 716.70, which was a bit of a break point, bit of a former support and resistance area. We've held that. We've bounced, not getting up towards the highs though. So maybe a bit of indecision coming in on this. Again, depending on what the Chinese are going to be doing with rates and so on and so forth. But now the price action is suggesting we might be getting a little bit of a pause. So I may look to take a bit more off my longs here and start pulling up my stop behind to lock in the rest, or at least lower my risk. The trend hasn't broken yet. If we're below here, then obviously the next level's down towards these lows, 710s again. If we get under there, then it looks like we may have more of a defined top up here. So for now, it's looking okay, but I would like it back above 719 and these prior highs. We shall see whether that happens or not. Okay, over to you, mate.
Yeah, sure. What am I going to look at? Well, I guess I'm going to look at a couple of those sterling pairs. Take the screen. Okay, first of all, sterling yen has put in a big rally from April onwards, with the yen, dollar yen, and yen finding a top again. We are, there's no exception, most of the yen pairs are higher, but I'd keep an eye on what's happening here in this sterling yen, because there is a pretty decent area where we kept also on the first attempt around 182, 35.40. If you look at this as a kind of a channel, that could be reaching up into the 185s. Actually, it's a daily chart, so it's pretty well. And then we have to look on the underside, though. If sterling gets sold off on the sterling yen, you have to look at what happens at the 180.5. So we're trading 181.5 right now, but watch out what's happened at 180.5. And so far, the setback that we saw stopped at 100 and pretty much at 180 dead yesterday and the day before. So there seems to be an interest to buy sterling yen still at 180 dead. But then keep an eye out of whether we close above or below 180.5, I'd say today. And then you take the Trump level at 180, the figure. If that would start to go, then there's something wrong with the sterling, and I would not be really looking at being long sterling yen right now. Cable. Well, I think the cable is pretty much yesterday's high, not yesterday, Friday's high here around 128.40s. That's going to be your measurement point above here. And below, I'd keep an eye on those lows here, 126.90 down to 126.85. 126.85.90, if cable starts to move back below there, there's a fair chance, I think, we are going to revisit 126. And that 126 right now for me is key. We have a fib here. We have a trend line coming in around there as well. Today, if we see sterling weakness, 126 is key. For as long as we're above 126, I'd say if you look at those moves, it's pretty steady, and it does like the good waves, and looks like a move that can go higher, which should take us somewhere to 130 if the dollar continues to be a bit under the cosh. But watch out for 126. If that goes, then it may spell trouble for the sterling, and then we will be looking at levels, well, back down into the 124s, I'd say. But first of all, it could already hold 126.80, in which case this is really a small correction, and we should be, and I think I've got it here, we should be on our way to this one around 130, which is the correction of the whole move down from 2014 to what we saw in 2022. It's 130, 38.2. So that's going to be a bit of a magic level. We can see it here as well. Back in 22, it held, bounced, and then when it broke, that's where the big decline came from. So 130 is going to be important if ever we get there. Euro sterling. The euro sterling is, as people know, yesterday after the CPI, I did take my short euro sterling off, because a little bit like what I thought the market would be doing or anticipating, is saying that, okay, we've seen what we had to see. As Ryan was already saying, this whole move had been directed by expectations building for the Bank of England, but also data not falling out of bed. And at one stage we were talking about it, even compared to Europe, the data were slightly better, because we saw some data starting to slow down in Germany, etc. And in the UK, the data were holding. So this was a pretty logic move somewhere, but then you have to reassess, right? Then you have to reassess. So what happened yesterday is on this blip, whatever, I took mine back, and now I'm in wait and see mode. First level of interest just above here is 25.35 on 86, and then here 86.60. And if those start to go over the day, then I think there's a really fair chance we are going to have a visit of 87. Downside, I'd say first of all around here, 85.80 for a starter, and then around here I've got another level around 85.70. So 85.70.80, that's where we're looking at. If that breaks, we could need an extension to it and go and have a revisit back down to 85s. But it's going to take a monster hawkish, and for good reasons, Bank of England, I think, to take this one through 85. I've also have support around 85.10 here, around this 85.10. I do have support there as well. It's going to take a very hawkish Bank of England, and for the very good reasons, to take this one through 85. I really think it's going to be important here. If I see such a move develop over after the Bank of England, I'm going to be very tempted to counter trade this. That for Euro Sterling cable, Sterling Yen. That's about it. What I wanted to show. Euro dollar. For as long as we are above this line here, 108.95. 109 and a quarter, it's hard to stand in front of the train. Okay, I mean, it looks like every hour it's going up a few pips. I'm not per se looking to trade euro dollar, also because I don't want to start to buy it here and then buy like 10 points before the top or so. But I think it's a bit late perhaps to jump on. But if everything stays all equal, we may be in for a revisit of those high 110s. 111 is going to be important, and we have an intermediate stage here at 110 and a half. Some people take it from here. Is that the one? Yeah, and that would be that. You see that was the 109.40 that people were looking at as well. Okay, a lot of people are looking for 112. It's possible. It's possible because the euro is really, really very big right now. But I prefer not to trade it. If I have anything, I prefer to trade it via the crosses because that always looks like that a little bit cleaner. And as a matter of fact, talking about crosses, I'm trying to see if this one gets back into this channel here. Euro Aussie. We've broken down, and then remember I spoke about this important zone around 158, mid to low 158s, and we went to test it and started to go up. And now the euro is really gathering strength, and it's possible that it's already holding 161, call it 70.80. We went for a little test this morning again, and it does look like it would want to hold. Keep an eye on what's happening in the end of the day here around 161, call it 60.70, and possibly 162. If we close the day above 162, I think there's another extension to be knit to it on the euro Aussie. If in turn Aussie gains strength, and it's we are about to retest the 68 there, this could also be affected and perhaps fail. We'll see what happens. I've got very, very small risk on here. And what else are we looking at? Yeah, the dollar CAD. A lot of it points to this zone here, 130, call it 70.80, 130, 70.80 could be a decent enough zone for the dollar CAD to keep an eye on. If not, 130 the figure, right? And that is for as long as we now stay below those prior spike high, prior low here around 132, 2030. As long as dollar CAD is below there, the risk is just a risk because the dollar in general is under the cush, apart from versus the yen, of course. Aussie dollar, well, here we are, 68.05, 68.20. 68.0520 is your resistance. Now, again, we could be starting to build something like that, which if it takes us up to 30.35, that could be enough. I think this is a good enough little resistance here, and why not start to build something like this? If we get back down 67.40, we have been talking about that already a couple of times. 67.40 is also my level. If you get back down and stay below 67.40, then the party may be over for the Aussie. But for now, I think we need a catalyzer in dollar to bring this one back down, not just Aussie weakness. We need something for the dollar. Kiwi as well. Kiwi held these lows here around 61.40, and we're already back now above the 61.90 figure. We could be in for a retest. 62.33 is also always a level that I was watching, and we had a little spike above there, little look above there. I think last week, yeah, and then we failed. So keep an eye on what's happening. 62.34, 35 on the Kiwi dollar. We're not too far away. And then we'll have to look. We have to look at this yen now. We really have to look at this yen. I'm still watching the mid 142s. That should be a decent level. We had one try here at 30. We had another try at 35 and capped. And I thought, like, with looking at the rest of the dollars, we should have already corrected. Let me do my squat. We should have already corrected down to 141, looking at the rest of the dollars, and it doesn't. And that's thanks to those guys at the Bank of Japan. I think they are just telling the market, well, hit me, you know. It looks like that. They look to be a bit masochistic for me. They are telling the markets we are not there yet. Noguchi again overnight is putting pressure on the yen. Because if it would be only for the dollar and looking at the rest of the dollar pairs, I think we should have already been retesting 141, or even, why not, down to 140. But we are hanging around here. So the risk is, to me now again, if the dollar refines some footing against the rest, which is a bit in doubt right now because we continue to sell dollars versus the rest. But if the dollar regains some footing, I think this one is perhaps going to blow out, and we are going perhaps over here. Remember, 145 is the level that a lot of people think that the MOF should intervene. The way yen crosses go, I'm not even sure that they are going to only look at the dollar yen. Because if you look at stuff like euro yen, for instance, we have broken now, and Blake was the first one to show this, credit to who credit is due. From the 1990s, we are breaking above, and this is all happening around 155 figure a quarter. And today we broke above, and if you close the week above this 155, call it figure a quarter, what is going to stop it, right? And again, the Bank of Japan is telling the people, well, we are not ready to move yet. So what is the market doing? You can't stay long yen. I mean, it's just too costly to be long yen for more than a couple of days. If you want to be long yen, you need to be right very quickly. Now, if this goes on, and again, I don't want to call what is not going to happen, but is the MOF only going to look at dollar yen, which for now is high but stable, or is it going to look at other yen pairs? And that's now the question that I'm asking. And because we are back at the top end of the Kiwi yen, for instance, go back to the high before the global financial crisis over 2015. Target is around 90. We are a bit away, but if the yen continues to weaken, we can't even rule out that we are going to go for a test there as well. I don't know. A lot is about speed, right? But I think at some point when the MOF will see that the yen is weakening against everything, perhaps they will start to get a little bit nervous, especially that they don't get the help of the Bank of Japan. Right, Ali, your gold. You see, we don't forget you. Huh? We always come back on what people are asking. It's looking fragile, but it's looking less fragile, in my opinion, than silver is. So we do have a bit of support here. Remember, I've already been showing this trend line before. comes in at around 19, 12, 13 right now. Well, yeah, around 13. So even if we get down here, if we break this little wedge around 1920, which is very possible, we can go there. And then I have additional levels around 1905, okay? I know a lot of people are calling for this to come off, but then with the dollar under the cosh, I'm not sure if this is going to fall out of bed. But if it follows silver, it should stay heavy, at least. Silver is in a bit of a different picture here. Once it's broken under 23.20, it did not look back, and we are, where is it right now? Where is it right now? We are 22.60, so we are already under this, under the May low. 22.25, 22. Those are levels that I'm watching. I'm having a very, very tiny bid in at 22, but I'm more interested to see if we can get back down here to the 21s, where I'll add to my long term. I'm still in my very, very long term position, but as people know, I've been scaling down on that position when we were here. So I'm very patient, but I may start to add if we visit 22, which is really not to be excluded. The way this is dropping relatively fast, right? Okay, and yeah, for the rest, watch those yields. It's a bit euro. The differentials have been moving in the direction of the euro, but I will argue that we're still not breaking the danger zone. If this differential goes above minus 145 BPs, that should really put a bit under the euro, okay? But even already going into the zone, the euro should continue. It's already bid without, and the differentials coming down massively. But keep an eye on that zone. You know, we are trading at minus 154-ish BPs. You get back above 150 into the 145, that should put another bid under the euro. Perhaps not specifically euro dollar, although it is rising, but also on the euro crosses. And that, Brian, is it for me.
Thank you very much, mate, for your valued insight as always. Yeah, dollar CAD, I'm keeping half an eye on amongst things because I've got that 30.80 level is a big one for me. Let's see if this works again. Can you see?
No, we don't see your screen.
Oh, I don't know what's happening in this poll. I had this yesterday with Stale after you left.
Same thing.
Can you share your screen again?
And give it back.
And no, I'll take it.
Okay.
Oh, did you give it up?
Yes, I did.
Okay, you put it on, and then I'll take it, and then let's see if that works. Right. Entire screen. That one.
I've lost my screen sharing, but your screen is back. Shall I take it and you comment on the dollar CAD or?
No, you had the level anyway, 30.80.
Yeah,
that's the level I was looking at. I need to have a look at what's going on with that issue that's piped up again.
Correct.
Technology, eh? Anyway, on the card today, we've got the only real US data is initial jobless claims. Keep an eye on that. That came in at a bit of a surprise to expectations last week at 262, unchanged on the week before, but it was expected to drop to 240 odd. Expected to come in there or thereabouts at 260. And just that housing data later on from the US, existing home sales, one to keep an eye on. And we get the flash reading from one of my favorite economic data points, the Eurozone consumer confidence flash, expected to remain as a minus number as it has done since its inception, apart from about 3 or 4 times. So that's on the cards later. Again, with the BOE, be careful, look at the numbers, the vote numbers, look at the vote numbers underneath in terms of who's voting for what type of hike, cut, whatever, hold. And look at the statement to see expectations from the bank as to rates going forward. That's likely to guide the quid today. And as much as I think it might end up lower on the day than where we start going in, I don't think it's going to break the overall trend for now. And Kay mentioned the levels where that might happen. Anyway, thank you everybody for coming to the Flow Show. Thank you to Kay for all his valuable insight as well. Be safe over the Bank of England, and we shall cut through the jib of it all tomorrow. Thank you very much, guys and girls.
Keep well all. Thank you, Ryan.
Cheers all.